Greetings, my wonderful viewers. Today, I'm going to make my attempt at valuation of Shopify. Now, this stock debuted at less than a little short of $30 in 2015, and in a space of just over 5 years, has gone over $1,000. And in my valuation today, I'm just trying to understand if this the stock price numbers, are justified. So, and how I'll be doing it is, I'll be breaking this into 3 steps. The first step is I'll be looking at other companies in this space and see if there are inputs that I can use as assumptions for my valuation of Shopify. I'll take those inputs as a part of my assumptions from comparable companies or similar companies, and add on other inputs specific for Shopify, like cost of capital and projections for the next 10 years. I'll put them into the spreadsheet available or provided by Professor Damodran on his website. And lastly, I'll look at the terminal value and use it to compare the current stock price, come up with a valuation of the stock, and compare it to the current stock price. So let's get started. I was intrigued by Shopify when the name showed up on a receipt that was issued by a local bakery. It's a small bakery, probably about 10, 15 employees. And they had a homegrown, like a website earlier, from which they transitioned on to the Shopify model. And just talking to the owner, I got the sense that they were pretty happy with how flexible the site was, how customizable it was, and they didn't seem to have any qualms about the price because they had let go of the local developer and move on to the Shopify model. So the business was there. Like, so any retailer out there which wants a web front, Shopify is a possible solution for them. But what's also interesting is that Shopify has yet to post a profit on its financial statements. So there is some kind of disconnect here, and that's what I'm trying to understand in my valuation today. So let's start by looking at some of the companies in this space. Now, there are no direct comparables for Shopify. The only probably a direct comparison would be BigCommerce, which just went public a few weeks back. But I was able to find out other 8 companies which are in this enterprise resource management space. And they are listed here in increasing order of revenues, the smallest being Kinaxis and the largest being Oracle, which is about 39 billion in revenues. So without any further analysis, I think what I could get from this is that the market cap that Shopify currently commands, it seems to be way out of sync in terms of the revenues that it's currently pulling in. So it does deserve a deeper look. Now, I need some data or some assumptions to develop my model for Shopify. So I've used the operating, these are the non-adjusted numbers for these 8 companies. And for my assumption, I'm using a target 18% operating margin for Shopify for its terminal year. I also need a reinvestment rate. And again, these are unadjusted numbers, but I'm targeting a sales to capital ratio of 1, which I'll be using for my analysis. And the last bit, which I would use this sheet as my guide, is I need a terminal value for revenues. So for year 10, I settled on a terminal value of midway between SAP and Oracle. So I ended up with a year 10 revenue of 33 billion. Now, these are just my assumptions. I'm not saying they are right or they're wrong, but I needed some starting numbers to justify these, to just get a sense of what the stock might be worth. Now, these numbers form the inputs to the spreadsheet that I'm using directly from Professor Damodran's website. And the other input that I'm missing in this spreadsheet is the cost of capital. So again, to keep things simple and straightforward, I used a debt rating of BBB, as well as I did not use a bottom-up beta approach. I just used the beta from Yahoo Finance to build up my cost of capital, which I assume will transition from a young company to a mature company by year 10. The revenue will go from year 1 of 2.6 billion to a year 10 revenue of 33 billion, and accompanied by and it over this 10-year period, it will transition from its current operating margin to an targeted 18% operating margin by year 10. Now, as you can see, looking at these numbers, the company will be needing a lot of cash from year 1 to year 7, and it turns profitable in year 9. If it'll be needing cash in year 1 to year 8. Now, given that there is a lot of cash that still needs to be raised for it to get to those revenue numbers, I've assigned a probability of failure of 20%, and that's incorporated into the spreadsheet analysis. So based on these numbers, based on the cost of capital, we get a terminal value, which is brought over to the present value. It's adjusted for current debt and cash, just for equity options outstanding. And lo and behold, divide by the number of shares outstanding, I have a per share price of $242. Now I have a chuckle because the stock's currently trading at just over $1,000 on August 25th at about 10:30 a.m. I'll take a pause here. There is something amiss here. Either my assumptions are awfully pessimistic, or there is something that the market knows that I don't, that I haven't been able to incorporate into these projections. So I'll close and summarize by saying this. I mean, this definitely needs some tweaking. I have done some tweaking with my input assumptions, but no number comes closer to what I'm seeing on the stock price. So I will be following this company on a periodic basis and posting my updates. If you have any suggestions as to what I could do to my model to make it a better estimate of Shopify's stock price, feel free to leave it in the comments below, and I'll sure to consider them. Keep visiting. If you like my analysis, so feel free to subscribe. Thank you so much for watching, and have an awesome time. Take care.